So Shri, can you just make you change your mind about, as we would call it, your bullishness on bonds, the fact that you think yields are going back down? Is this a game changer now with the vaccine?
I don't think it's a game changer, Kelly. I think there are three major components to a bond yield. What happens to inflationary expectations, whether your economic growth expectations have changed, and then special extraneous factors such as the coronavirus or discovery of a vaccine. So that has acted, but the other two elements, economic growth expectations, inflation, have not changed. So I think the bond selling today is overdone.
All right. Chad, let's talk about equities for a moment. If Shri's well, let's go through the scenarios. I mean, on the one hand, you see financials benefiting massively from the jump in yields today and this huge rotation into those value parts of the market. Do you stick with that? Or if Shri is right and yields aren't really going up that much, is this whole thing a head fake and it's going to be back to the prevailing trends?
So it depends on your time horizon. If our time horizon is 18 to 24 months out, we think in the second half of 2021, you're going to see a jump in economic activity, not only here in the United States, but across the globe. We now are favoring value stocks over growth stocks, so we would be leaning towards that. We'd be looking on the sector side towards industrials, consumer discretionary, as well as healthcare. So look no further as a Disney or General Dynamics, or, for example, United Healthcare, Merck, or Pfizer. But overall, we're very overweight equity exposure at this point. We've been since March, and we believe global growth expectations, once again, in 2021, will be far above what consensus is.
And Shri, I know we always kind of start with you with bond yields, but I am curious if you are bullish on equities here and more bullish on the U.S. economy, certainly than you would have been a few months ago, now that with everything that we now know.
Clearly, the recession is continuing, and the discovery of the vaccine, I think, doesn't mean that we immediately have a V-shaped recovery. Tyler, for instance, earlier in your program, Kelly, had the discussion that the vaccine discovery does not mean immediately that everything is okay. You're going to wait for another 6 to 8 months before it's at least that long for it to be commercially available, and thereafter for it to have an impact on the economy. So the next 6 months, you're dealing with a high level of unemployment. You're dealing with the problems with the economy, and they are not going to go away. And one point I want to make is that the global demand for treasuries is continuing. While the Chinese holdings of U.S. treasuries have fallen year to date, since the pandemic began, foreigners have come into U.S. treasuries and they are holding on to it. And that's going to remain a support to the bond market, very much so, despite the fact that the economy will remain weak for some time.
So you differ with Stan Druckenmiller on that, who last hour just told us he thinks that's maybe a key part of the weakness that we could see for the dollar. We'll dig more into it. We'll leave it there for now, gentlemen, but thank you both, Shri Kumar and Chad Morganlander, with their thoughts on the markets today.
Shepard Smith here. Thanks for watching CNBC on YouTube.